The next sheet in this series is the What If sheet. You can use this sheet to see the impact of variations in things like construction costs, renovation costs, and interest rates, and see what happens as far as the projected profit or loss is concerned when these items change during the course of a project. You will notice on the right-hand side of the screen some columns of numbers. These are the totals for the project for the individual cost items that have been taken from the project's summary sheet. On the left-hand side of the screen we have a number of slider bars, and each of these slider bars relate to a cost item, and we can use these slider bars to increase or decrease the cost items so that we can see what impact that has on our bottom line. For example, if our construction cost were to increase by 10%, we can immediately see what impact that has, not only on the construction cost, but it also recalculates the interest charges and the GST liability if it is applicable. Any number of these slider bars can be used concurrently. For example, if we thought that we may have an increase in the construction cost but we also had a decrease in the interest rate, we can apply these changes concurrently. In addition to changing the individual cost items, we can also see what impact it would have if the construction time or the renovation time alters as far as the project is concerned, and if we go down to the construction time for example, and we increase the construction time to say, 8 months, and we can immediately see what impact that would have. Once again, when we change these things, like changing the construction time, not only are all the financials recalculated, but in this example the settlement time for the sale of the property will also be changed. None of these changes have any effect on the data entry sheet. The program also has a number of facilities which allow us to instantly determine our worst case scenario, and our best case scenario, based on the confidence we had originally entered as 95% at the top of the data entry sheet. When we select worst case scenario, the difference between the confidence rate that we've entered and 100% is automatically added to all the individual cost items. In our example, the amount added to all of these cost items would be 5%. In addition to adding 5% to all the cost items, the gross sales will also reduce by the same percentage. Once these changes have been made, all of the other items such as the interest charges and the GST calculations are automatically modified, and this gives us a new profit and loss percentage based on the worst case scenario. We can also look at the best case scenario. The best case scenario is essentially the reverse of the worst case scenario in that rather than adding 5% to all of the cost items, it reduces the cost items by the same percentage. In this scenario there is no adjustment made to the gross sales, so using these facilities we can see what the range of options are likely to be as far as the profit and loss on this project is concerned. Even when we've selected either the worst case scenario or the best case scenario, the slider bars are still available to us to make adjustments to the costs to see what impacts they would have over and above those scenarios. This sheet also has a number of other options available to the user. For example, we can revise or calculate the purchase price, or revise the gross sales to achieve a particular results in our project. We have achieved the result of $225,000, so if we wanted to see how much we could pay for the property and still achieve the result, of say $200,000, then all we need to do is enter our target amount here, click on Based on Profit Loss Amount, and when we do that the purchase price will be recalculated to give us a profit of $200,000 in our project. Where we had originally budgeted to spend $485,000 on the property, we can see that we can spend as much as $505,000 in order to achieve that result. We can also do exactly the same thing, but rather than recalculate the purchase price, we can recalculate the sales figures. So by clicking on Revise Gross Sales after entering $250,000 in the Based on Profit/Loss amount, the program will automatically calculate our sales figure to achieve the same result. So assuming that we are spending $485,000 on the property, we know that now we have to sell for at least $1.57 million rather than the previous $1.6 million in order to achieve the result. As before, where we were able to use the slider bars when we changed to worst case or best case scenarios, the slider bars are still available, even when we've recalculated these amounts, but obviously, when we do this on this occasion you will see that the profit/loss amount will vary away from our projected target of $200,000. Calculations cannot only be based on a dollar amount but can also be based on a percentage, for example, return on investment or cash on cash return as our target rather than a dollar amount. I would also draw your attention to the fact that as we were making these adjustments, the funding analysis was also being changed, and this would show us, in each different scenario, the maximum funds that we would require as well as funding from our lender. One other very powerful option that this sheet provides is the ability for the program to calculate the purchase price that we would need to offer at an auction. In our data entry section, we go back to the top of the screen, and rather than enter an estimated purchase price, we can enter the purchase as 0. For the time being, we will ignore the error at the top of the screen and return to the what if sheet. Now you will see that our profit or losses are very high because we have not paid anything for the property. By clicking on Revise or Calculate the Purchase Price, and entering a target value and then clicking on Based on Profit/Loss Amount, it will calculate a purchase price for us that we need to offer at an auction in order to achieve that profit and loss result. When we click Apply, that figure will be transferred to the data entry sheet and it will form the basis of our feasibility study, and when we go back to the data entry sheet, you will see that the estimated purchase price is now entered there. In addition to all of these functions, the what if sheet can also be used to assess the impact that variations in foreign exchange will have when we are investing overseas. For the purposes of this demonstration, I've made a number of simple changes to the input data in order to make a more typical example of a project that we would do in the United States. We need to establish the fact that the project is going to be an international project, so we return to the data entry sheet and we need to select Other as the state, and because GST is not applicable in the United States, we need to select the GST scheme where the seller and the purchaser are not registered. This will mean that the program will not calculate any GST, either on costs or on sales. Once we've done this, we can return to the what if sheet, and this time you will see that there are a lot more columns shown. In particular, the results columns are now not only shown in US dollars but also in Australian dollars, and now we can use all of the same scenarios that I had previously described, whether we vary interest rates or whether we vary construction costs, and we can see the results in exactly the same way as we did before, but this time expressed in US dollars rather than Australian dollars, and the funding analysis will be changed as well so that we can see what the funding requirements are, in American dollars and in Australian dollars. In order to see the effect of fluctuations in exchange rates, we just need to go down to the slider bars at the bottom of the screen, and by changing the slider bar we automatically see how that will affect our cash flow and our cost base as far as our project is concerned, in both US and Australian dollar currencies. The what-if calculations that I have described to you in this video are the sorts of calculation that you will not find in any other software that I'm aware of as far as real estate investing is concerned. Used properly, and to good effect, these sorts of calculations should give you absolute confidence that your project is viable.